Getting ready to trade November week 3. November week 3 is monthly OPEX across the whole market, but most importantly here on the S&P 500 we have a weird way that we handle monthly OPEX. I wrote a blog article about it 2 years ago. It's in the blog. It's the article not November, but week 3, the unique expiration or something like that, I think is the title of the article. Please read that if you are new to trading S&P 500 and don't know what I'm talking about when it comes to when it comes to monthly OPEX with the S&P. Here's our weekly chart. Here's where we closed the week, November week 2, with one of these really strange candles where we just made it to a green candle at the very end of the day, meaning we rose above where we had opened on the week, and we wound up sticking the landing for a new all-time closing high finally on Friday. After failing to do so all week long, we had made a new all-time high on Monday morning early, and then sold off and didn't make the required all-time closing high to go with it. But finally on Friday, we made it back, and we did so. Also, since it was a Friday, it became a weekly all-time closing high as well. And last week, November week 1, we closed finally at a new weekly all-time closing high after several weeks waiting on one since the one made in August, at the end of August. Finally, in November week 1, we got our new weekly all-time closing high, and I told you, look out, we're going to be making a new all-time high soon. Little did I know it would be on Monday. We had gotten some vaccine news in the pre-market, and futures rallied 100 points to a new all-time high on ES, backed off from that all-time high. S&P opened, still made a new all-time high, very high, much higher one, but it never resolved that one with ES. So we have some unfinished business with ES to take care of. On Friday, I wasn't so crazy about the rally either. I thought it looked a little bit like short covering. It was announced as we got into the afternoon that Trump was going to be making a speech or remarks or whatever from the Rose Garden talking about Operation Warp Speed. So people I thought were short covering ahead of that. Just in case there was going to be some new vaccine news, or maybe he was going to say something positive about the election that would make the market lift this uncertainty, and most assuredly we will rally once he finally gives that concession on the election. Here is one of our daily charts. This I call the simple daily chart. We focus on a fork using swing levels that we are in at the moment, and we focus on the position of the SMAs with this chart. So looking at this fork that we were in right now, this new plot point that I put on it when we made the October low, and then from the October low, we wait for price to swing back up and hit the median line, and sure enough, it did. On Monday, it broke through the median line, came down, but then closed back below it. Then on Wednesday, we made another little rally attempt and closed below it, and Friday, another rally attempt and closed below the median line, and not only that, but we closed below 35.8811. Why couldn't we have just gone the distance 3 more points and made a higher all-time closing high above, and made it above the previous all-time high back here in September? But instead, we pulled back below it. Maybe it was just options bets. Maybe I'm making too much of this. 35.8515, that is pinning right to the 35.85 level. Maybe there was somebody with a lot of heavy short call bets based on where we had opened on Monday. And based on where the previous all-time high was, maybe somebody was very heavily short 35.85 calls and just insisted that we not rise any higher than this, and got his or her wish by manipulating futures and making that happen. So maybe that's all that is, and we pop out of here on Monday and everything's fine, and I've made a big problem where none exists. Well, let me add more to my problem thing here. Friday, our rally high failed just below Monday's halfway back. Monday, this huge range day where we made our all-time high. Why couldn't we have gone the distance and made a little higher high over that? So, no, we didn't. So, here's my thing. If we come in on Monday, flat or higher in any way, we should be taking out this halfway back from last Monday's range, and we should make it support. And if we do, we're just going to keep going higher until we get up here to the all-time high. And if we can get above 36.46, that means we're going to go on and we're going to resolve that ES all-time high, which should take us with the current spread around 36.72 on the S&P. If we come in flat or weak on Monday, the first thing we're going to be looking for is the halfway back of Friday's range. Since it was a significant day that rallied to a significant point, and ended with a significant result. The halfway back of the day is important. And right now, just eyeing it, it looks like it's about 35, 70, 71, 72 or so. Just below that would be Thursday's high. So you can see that once we got above Thursday's high, a second set of buyers gloms on, and we more than doubled the day up from there. So if we come back and can't hold above that area, we're going to test all the way back to the low of the day from Friday. And if that breaks, we'll fill the gap to Thursday's close. If this is not enough to satisfy the sellers, then we're going to come down just a little lower here to this 35.2905 level. This was week one. This was November week one high, week one's high. Our 10-day simple moving average is rising very quick. It rose 30 points between Thursday and Friday. If it's going to rise another 30 points, it's going to be all the way up here, right in line with this 35.29 level on Monday. So if we come down here and we just look above the 10-day simple moving average and reverse, or just look below it and reverse, that's going to be the end of that. So be protective of your puts and know where that 10-day simple moving average is. Here's what happened the last time that we tangled with it, the 10-day. This was October. This was that suspicious lower high than we had made in September, rolled over. Here was the first interaction with the 10-day. It was just a little look below and reverse and a huge rally back on the day. But then lower highs ensued after that. And the next time we came down to it, we looked below it and we broke and doubled down, a little more than doubled down the day on it. You can see how the 10-day line splits this big candle in half. So that's what we deal with when we get to the 10-day simple moving average once again. I think it would be like this, worst case scenario would be this, and maybe a little look below and reverse. And I think that as long as we come back and we would take back out and get back above Friday's close and so on and so forth, we're going to rally on back. If that 10-day were to break with more than just a look below, we look to October settlement price. Since we're getting into November settlement this week, monthly OPEX, the October OPEX settlement price becomes very important because it was a new all-time high settlement. So here we are coming into November OPEX, and we want to make sure that we're making another new all-time high settlement. If we get to Friday and we settle below this 34.97.96 level, then we are probably going to have a little bit further selling to go. If we come down here and reverse above and do not break, more than a look below 3,500, it has to do with this October settlement price. But no matter what happens, when we get to the end of the week, we want to know where we are in relationship to this price, because it will have a lot to say about what's going to happen in those days following November OPEX on Friday. So once we get that OPEX out of the way on Friday morning, maybe if we're settling at a new all-time high, but we've been lagging all week and we can settle above here, then we're going to get that rally going on Friday again. If we break down below October's settlement price, then we have this gap that takes us back to Wednesday, November 4th's close. This was the close after the election, and the 20-day simple moving average is moving up in here. And what right down the middle of it, but this is the November halfway back. It's risen all the way up to here thanks to this big high that we made on Monday of last week. So the November halfway back at 34.62 and the 20-day simple moving average and this gap to Wednesday, November 4th close. That, I think, would be the maximum point that we would sell to for this leg, because we're heading into Thanksgiving and we're heading into the real spark and the bang of the Santa Claus rally and the time of the year when fund managers really have to paint the tape and get their portfolios going. The only time in all of the years that I've been day trading since 2005 that I have ever seen us sell off around Thanksgiving and into Christmas was 2018, when we had that horrible Q4 sell-off because of Trump and his China trade war that was like full-blown, full barrels going. And that sold us off horribly into Q4 and into Christmas and everything. So that was the only time in all those years, even with the 2008 financial crisis, I never saw us sell off in December into Christmas. But we did in 2018. So I highly doubt that we have anything like that happening this year, although COVID is way worse than a China trade war. And Trump refusing to leave the White House is also a lot worse than a trade war with China. So I could be giving the bulls too much credit here, but I do think that the worst case scenario for anything going forward into the future here in the next couple of weeks would be anything lower than about 34.43 to 34.62 would be the maximum point that I think that we would dip down. Okay, that's it. I don't want to drag this video out for too long. I hope I didn't go back and forth too much between bullish and bearish. Have a great rest of your weekend. If you have any questions, send me a direct message or check out the blog because there's usually all your answers are answered in that. There's a glossary of terms as well. Have a good weekend. As always, good luck and good trading.